Hey, welcome back. And today we're going to be talking about what is seller financing real estate. So are you looking for alternative solutions for buying real estate, especially if you're having a challenge with qualifying for traditional financing? Well, that's what today's video is all about. We're going to be talking about the pros and cons of seller financing real estate, as well as the risks and the rewards for you as a buyer, as well as for the seller. So if you're looking for a different kind of twist on getting into real estate or growing your portfolio, that's what this is all about. So what is seller financing real estate? Pretty simple. It's when the seller acts like the bank instead of you having to go and get a bank mortgage for a property. Instead, the seller is going to be taking that role for you. They're going to be financing you instead of insisting on you getting all of your own financing. So why on earth would any seller be willing to do seller financing on a property? I mean, why not just list it with a realtor, sell it, and be done with it and get a big lump sum of cash? Well, there's lots of reasons why sellers might be willing to finance the sale of their property. Number one is because of a relationship. I've got an acquaintance of mine who struck up a conversation with a well-to-do elderly gentleman who had a piece of property that he really wanted. So they started a relationship, they started getting to know each other a little bit, and the seller really liked this guy. He was a younger guy with a newer family, and he just kind of took him under his wing, and because of the relationship, he was very open to the whole idea of doing seller financing. Now, that's kind of a slow way to go. What are some of the other reasons sellers might want to do this? Well, number one is it can offer them a way to get a quick sale. It gets the property kind of off the books, out of their hair. They don't have to worry about it, especially if it's an active rental property. And this is a fast way for them to get it sold. Because if you offer seller financing on a property, you're going to get a lot of phone calls, a lot of interest around that property compared to other ones that are looking for more traditional financing. So it offers the seller a quick sale. It can also offer them a higher sales price. I mean, think about this. If they're able to sell the property faster and easier, then they might not even need a realtor to be involved there, so they can save the money on a real estate commission by offering seller financing. And they can charge top dollar for that property because they're offering seller financing. They're making it so much easier for more people to be able to qualify to purchase that property. So there you go. There's another reason they're able to get top dollar for that. And yet another reason why sellers might look at doing this is because maybe they don't even want to get a big chunk of cash all in one fell swoop. Maybe the tax implications of them completely cashing out on that property are going to be very, very severe, and they'd rather spread that out over time instead of taking such a big hit right off the get-go. So this is a way for them to minimize or delay how much taxes they're going to have to pay. It's also a way for them to generate some consistent income from that property without having to deal with the headaches of tenants and toilets. That's going to be your situation to deal with from now on. Now they just get to act like the bank and get the money, the mortgage money coming in, month out, secured by a piece of property. So those are all the different reasons why a seller might look at doing seller financing. Now, what are the advantages for you as a buyer when it comes to seller financing? Well, kind of obvious, right? You don't have to qualify with the big banks to buy the property. You don't have to jump through all the hoops. You don't have to go through about that much paperwork. You don't have to go through the financial proctology exam they're going to give you to see how much money you're making, how much you owe, what your credit cards are looking like, all this kind of stuff. You're able to deal directly with the seller and avoid all of that kind of crap. You can also negotiate much more favorable terms, maybe even better interest rates directly with a seller than you could with the bank, or most definitely compared to what you could with a hard money lender. You're going to get much better rates and terms dealing directly with the seller. So you're able to get into the property faster. You don't have to go through so much rigmarole with qualifying. You probably don't have to come up with as much money for a down payment. These are all big benefits for you as a buyer looking for seller financing deals. So what are the different kinds of seller financing deals out there? Well, there's lots. It depends on, the language kind of depends on where you're at, where you're located. So around my area, you can do things like lease options, rent-own type deals. You can do agreements for sale. You can do land contracts. You can do agreements for deed. all of these different kind of things are basically the same idea, where you're going to end up owning the property and the seller is going to end up being the bank for it. Okay, so with an agreement for sale, that does protect the seller a lot better than just a normal transfer of deed, because the agreement for sale is exactly that. It's an agreement. And you don't actually get ownership of the property until you've completed that agreement. You get control of it, you get to do what you want with it in the meantime, but they still are the owner on title. Same thing with a lease option. With a lease option, you've got an option to purchase it, and you're leasing it, and you're making payments on it in the meantime at a fixed amount, at a fixed purchase price, and then you can turn around and you can do another sublease, a sub-rent-own type deal with an end tenant buyer there. Okay, so lots of different options there. You have to look at what's going to work best for you and what your seller is open to as well. So what are the risks of doing a seller financing type deal? However, the seller, there are a few risks. The number one risk is that you, as the buyer, default on your agreement and they end up having to foreclose on you to get their property back in the first place. And that can be a very expensive and cumbersome kind of a journey to go down. So that's one of the risks for the seller. Again, one of the ways they can mitigate that is to do a different kind of a deal where it's like an agreement for sale instead, where you don't actually get title until you complete the deal, or a lease with an option to purchase. Again, in both of those scenarios, they actually keep ownership until you complete on the deal. Now, what are the risks for you as a buyer if you're doing a seller financing type deal? I mean, it might sound like a perfect kind of scenario. You don't have to really jump through all the hoops and qualify for bank financing and all that kind of stuff. But there are a few risks that you have to be aware of. One risk that you have to be aware of is, just like the bank, if you don't make your payments, that seller can foreclose on you. And they can have the agreement in such a way that they can make it very, very difficult for you to get out of that. So I've seen certain situations where some unscrupulous sellers have kind of set up the buyer for failure by putting in a whole bunch of different clauses in the agreement that if they make any little mistake, they get the property back. So you have to make sure that you really take a fine-tooth comb through that agreement and understand it up front. And the second big challenge that I've seen from time to time with these kind of deals is there might be some encumbrances or some liens or some debts owed on that property that you might not be aware of. So one of the advantages of doing a traditional purchase of a property is the banks are very persnickety. They're very detail focused. That means they're going to go through everything and make sure that there is clean title on that property. You, as a real estate investor wanting to do the deal, you might not quite do as much due diligence on the background of that property. So you want to make sure that if you're buying a property like that, that you understand exactly what's involved, what's on title on that property, what kind of risks you might be facing down the road. All right, so with everything that we've talked about with doing seller financing type deals, it might sound like, hey, that's great. That's all I want to do. I just want to focus on that. I don't have to worry about the banks. I can go to town. Well, yes and no. These seller financing deals can be fantastic. The challenge is they are few and far between. So you got to remember that only about 30% of the properties out there are free and clear and could be in the situation where you could do one of these kind of deals. The big challenge is there aren't that many of them to start with, and then there are even fewer sellers who are willing to do this. Most sellers just want to get rid of the property and get the big chunk of cash the traditional way, right? That's what most people are really focused on. So it's kind of difficult to find the perfect storm, the perfect setup situation where you've got a property that's got no mortgage underneath it, and you've got a seller who's willing to do a seller financing type deal. But here's the good news. You don't have to worry about that. If you've got access to joint venture partners and other people's money, you can do any kind of deal that makes sense that comes across your table. All right. Now, seller financing deals, I got a great example here. Our client, Corey, got into some very creative deals. He did a lot of traditional type deals, but he did kind of a combo on an apartment building deal a few years ago. I can't remember how many units it was. I think it was 36 units. And he had a motivated seller, because it was kind of a rural community, who was open to the idea of doing seller financing. So he arranged it, but the seller still wanted a good chunk of money as a down payment. So Corey did a combination. He did the perfect combination. He did the seller financing, So he didn't need to qualify for the bank, and I think he had a 5-year term on that where he could get everything organized and then go get it refinanced. And then he brought in joint venture partners who put up all of the money for the down payment and the renovations and the closing costs, and he combined that together. So it's the perfect scenario. It's the perfect way to do that. So again, seller financing deals are great. Quite often, you're still going to have to come up with money for the down payment. So bringing on joint venture partners is a great solution. And if you're looking to do that, I got the solution for you. It's my book, The Money Partner Formula. I'll put the link in the description below, or you can go to investorattractionbook.com. And this is going to help you dial in a proven system for raising your first 6 figures or your next 6 figures in a matter of weeks, and even 7 figures in a matter of months. So again, investorattractionbook.com, or click on the link below.